Welcome to yet another Stock Market Weekly recap here. We're going to do the same strategy as always, look at the major indices, then we're going to take a look at my portfolios, and then get into some of the news for the week. Overall, a relatively volatile week, all things considered, as you can see from the chart here. But on the 5-day here, the full week, we were up 3.29% as far as the Dow Jones is concerned. Nearing 25,000 on the Dow is seemingly absurd given the current environment we're at, to where year to date, still down 14.27%, but all things considered, that's not too bad given the current environment. So, pretty nice week here for the Dow Jones. The S&P 500, similar story here. Nothing really much different, very similar, 3.2% gain on the week. But year to date, this thing is actually only down 8.5. So down close to half that amount. Not bad. Same volatile trading chart here. Then if we look at the NASDAQ, that's right. All the indices actually were pretty similar to each other this week. It's interesting to see that. Typically, the NASDAQ has been outperforming, but the NASDAQ was up 3.44 as well. Overall, the NASDAQ is up 3.92% year to date, and there's many reasons for it again, and I mentioned this specifically because of the fact that the NASDAQ is very tech heavy, and a lot of these companies actually found some benefit because of this current environment, as we've kind of been pushed more into the digital age because of this. So very good year for the NASDAQ already, all things considered, which is weird to say. First, we'll look at our M1 Finance portfolio. We did cross the $10,000 time frame here, or $10,000 mark. Pretty nice to see it. I'm very happy about that. No real major additions to the portfolio. Overall, we were up 7.6% this week. Earned $13 in dividends, $712 in market gain. Pretty nice to see it. Didn't really make any major additions going on here. So, same old portfolio that you know and love. Pretty cool. So all time for this portfolio now up 9.68%. As of now, started this in July of 2018. So I'll take this. Not too bad, all things considered. That earned dividends number is what I really enjoy seeing there. 285.96 all time earned dividends, and that number is going to keep growing. It's what I love to see. Then, if we look at our Robinhood portfolio, at $15,489 right here on the week, up 4%. So I did outpace the market this week. Pretty nice, all things considered. There were some additions made, a lot of dividends paid this week. I found out there's some sort of bug with the web version of Robinhood, where it's not showing the account history. So I can't see every single change. This is going to be the easier way to look at it, though, through these messages. If we go back to the 18th here, start of the week, we can take a look at everything that happened this week. So NRZ, New Residential, paid me a dividend, 75 cents total. Reinvested it into 0.12 shares. Nothing really crazy there. Pretty minor. Realty Income, the monthly dividend company, gotta love it. Paid me $4.68 in dividends, which reinvested into 0.089 shares. Nothing too crazy there either, but we take that because it just kind of compounds from there. You know, the more shares you have, the more it pays you out. ABBV, AbbVie, paid me $4.72. Got me 0.05 shares. Pretty nice. Omega Healthcare, one of these big ones here, paid me $13.40 in dividend. Reinvested into 0.484 shares. Pretty nice. It was a little bit above my cost basis, so that's why I haven't been purchasing. I really wish I had purchased back when it was down at 13, but it's all right. This is a very good dividend play here. This Omega Healthcare is very happy about it. So with some of that money, I went ahead and bought, or with the money I introduced this week, I went ahead and bought some shares of Tapestry, $50 worth of Tapestry. Tapestry Brands, which was equivalent to $3.88 shares at an average of $12.89. Kohl's, I also bought some Kohl's because, why not? 2.9 shares at $17.14. My investment thesis has always kind of been invest in the face of fear. So when there are markets that are extremely struggling, you need to take advantage of them. And these are two companies that I really do enjoy as far as long terms considered, and they're good value plays and just dividend payers in the future. Right now, they've both suspended dividends, and that's why they're down so high. And they're losing a lot of business just because of the current pandemic, but they're ones that'll get through it, and I think will be resilient in the end. They're really boosting their online sales because of this, and things are going well. So I think 2 years down the road when we're not considering about this, I'll be happy I picked these shares up pretty cheap, and I'll definitely look to pick up more as well. New York Community Bank paid me $3.40 in dividends, 0.36 4 shares. Oh, I'm okay with that. TD Ameritrade paid $1.24 in dividend, 0.035 shares is what that equates to. Here was really the big play of the week, Sorrento's Therapeutics, one that shot up pretty massively. So I bought a put option here, a short-term put option, expiration date of 6/19 for 80 cents per share, or equivalent of $80. And I also bought one equivalent of $20, $2.50 put, being 100% transparent here. So I went ahead and sold that $4.50 put for $1.10 per share, or equivalent of $110. So that's $30 profit. And I got to be honest, I dumped for a loss for the other one just because I didn't want to risk losing the capital. So I sold it at $10 or 10 cents per share. So $10 loss on that one. So overall, I put in $100 capital and ended up with, a $20 profit. I'll take it, all things considered, if you're subtracting this $10 loss here. I'll take $20 profit in literally one day because I bought these. Oh, no, I don't know. It was 3 days. I'm sorry. It was 3 days. 3 days, $20 profit off of $100. I'll take it. Let's see. Let's see. And finally, at the end of the week here, I bought. Don't want to scroll all the way down. I bought 5 shares of PSEC Prospect Capital at $4.97 per share. So that was my week here. Let's get into this news. Obviously, we had JCPenney file for bankruptcy, selling a lot of their stores, and Amazon is in talks of maybe purchasing them or another apparel retailer similar, because they want to get a big part of that game. And while JCPenney's weak, obviously they can't partake in this purchase because of the fact that there's a bankruptcy outstanding. Once they figure all that out, JCPenney could potentially be purchased by Amazon, I should say. We have Disney's streaming chief, Kevin Mayer, moving to become CEO of TikTok. Are you kidding me? And chief operating officer of the popular parent app ByteDance. That's interesting. So, weird to see. So Mayer was heavily involved in the purchase of Pixar, Marvel, Lucasfilms, and 21st Century Fox. Again, just because he was high up in the company. So nothing too shocking to me. I think they'll do fine. Disney Plus is rocking it out, and maybe this could be a beneficial thing. Walmart posted a masher of an earnings, 10% growth in comp sales. E-commerce growing 74%, pretty massive. We saw Target also grow e-commerce over 100%, 134%, I believe. Crazy stuff, and also 10% comp sales, pretty crazy. And most of that was all done through online retail, so pretty massive. Facebook is rolling out Shops feature, just like they have on Instagram Shops, which is pretty nice. This is a massive opportunity for Facebook here. As they're allowing people to, from their creators, go right to pages to purchase products. I mean, this is massive for Facebook. Just more money in the tank here. Partnering with Shopify, BigCommerce, WooCommerce, and Channel Advisor, just massive. This company's doing well. That's all I can say. Is Facebook is just another. They just keep expanding, more opportunities everywhere. Again, yeah, Target and Lowe's had really good reports. Home Depot wasn't bad either. So retail, the essential retailers were doing really, really well. There was also talks of some U.S.-China trade tension. So China rhetoric is back in the spotlight. As he says, the pain and carnage that was spread from the country all comes from the top, blaming the high-level executives. Don't necessarily blame that when the country maybe botched it a little bit. They may have lied just a little bit. What can I say? So China drops their GDP target. The country's economy shrank 6.8% in Q1, the first contraction in decades. Crazy. Yeah, we will work on the United States to implement phase 1 of the economic and trade agreement still. So that's what President Li Keqiang, I don't know his name, I'm sorry. But yeah, China scrapped its annual growth target for the first time since it began the practice in 1994. Pretty crazy. And we end it with very good video game report in April. Industry sales grew 73% from year-over-year perspective. Pretty massive. Year-to-date spending, which was down slightly as of last month, is now up 12% versus last year. Not a shocker at all. Hardware spending rose 163%. That's okay. Okay, that's what I said. 163%. Accessories, game cards grew 49%, and software sales rose 55%. Massive stuff. Nintendo Switch was the highest selling console. Accessories rose 49%. So the PS4 controller, standard black controller, was the best-selling gamepad. The best-selling headset was Turtle Beach's Xbox One Air Force Recon 70s. Good for them. Another strong month for Modern Warfare, Call of Duty for Activision Blizzard. What can I say? Final Fantasy VII Remake. That one, my throat was not happy with that one. And Animal Crossing New Horizons dipped into third. So, and again, you see Grand Theft Auto still number 5. Grand Theft Auto 5 is still number 5. That is insane. NBA 2K number 4. Resident Evil 2. Call of Duty Modern Warfare sitting at 7. Modern Warfare 2 Remastered, I should say. And will be the show at 8. And Madden NFL 20 at 9. And Red Dead Redemption at... That's right, number 10. So, yeah, that's it for the week, and I really hope you enjoyed. Let's hope for a good week ahead of us. Only 4 days of trading, but maybe it'll be good.